Check it out. Here's our August 2024 real estate news brief. The Fed kept rates steady again, but said that a rate cut on September 18th was definitely on the table, given progress on inflation and the recent rise in the unemployment rate. The bond market rejoiced, helping to send average mortgage rates near 6.6%. FHA and VA are currently trending at the low 6% range. These are the lowest rates we've seen since December of 2023. Hi, I'm Shemeika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. Reminder, only 1 month, actually 17 days, less than 17 days remains before the August 17th implementation date for the NAR settlement. And are you ready? The June PCE inflation eases further. This came out last Friday with headline PCE rising only 0.1% month over month. The annualized figure dropped from 2.6% year over year in May to 2.5% year over year in June. Core PCE, however, rose 0.2% month over month, keeping annualized figure at 2.6%. Stale listings growth nationwide. 65% of the homes listed nationwide have been on the market for at least 1 month and 43% at least 2 months, according to Redfin. Case Schiller, another home price record set in May. The seasonally adjusted national home price index rose 0.3% month over month in May 2024, bringing the year-to-date gains to 1.8% on an annualized basis. That would be 4.4% according to DGI. FHFA home price growth decreases the FH numbers, transaction finance with a mortgage. On their numbers, home prices were flat month over month in May, but were still up 5.7% year over year. Job openings surprise. There were 8,184,000 job openings at the end of June, well above expectation of 8 million. Additionally, the May figure was revised up from 8,140,000 to 8,230,000. Job creation and pay gains slow. Private employers added 122,000 jobs in July, well below expectations of 140 to 150,000. Annual wage growth for job stayers dropped to 4.8% year over year, slower growth in 3 years. The wage split job levers plunged from 7.7% year over year to 7.2%. What the Fed said, the Fed kept short-term interest rates on hold for its 8th straight meeting. The last rate hike was in July 2023. However, Fed Chairman Jerome Powell said the improvement in inflation and the loosening of the job market put a rate cut on the table at the next FOMC meeting on September 18th. Treasury yields and average mortgage rates promptly dropped. The Fed hasn't raised rates in a long time, but the steady decline in inflation means that real inflation-adjusted rates continue to rise. The widening of that gap between the blue line and the yellow line is a form of tightening. Pending sales partially rebound on lower rates. June pending sale homes going under contract rose 4.8% month over month as an average 30-year mortgage rate moved below 7%. Keep in mind, however, that the current index level of 74.3 is 3% lower than June and 36% lower than June of 2021. The silver lining to all this is that transaction volumes can't go much lower, especially if the Fed starts a loosening cycle and mortgage rates keep trending down. Key BLS jobs report out on Friday. Consensus expectations are for 175,000 job additions and the unemployment rate to remain at 4.1%. We've got to assume that Mr. Powell gets a sneak peek at these numbers, so they're likely to be disastrous. As always, watch for a downward revision to the prior 2 months of data. So what happens on August 17th? For months, everyone, including me, has made their best guesses as to how things will change short-term and long-term with the implementation of the NAR settlement. Well, in just over 2 weeks, we'll see what's actually happening. One thing's for sure, there's going to be a lot of confusion. Still, I thought it would be useful to show what has already changed with regards to the NAR settlement. Removal of fields related to offers of compensation, August 1st implementation from NCR-MLS with enforcing starting August 17th, August 14th implementation from Bright MLS. These are just a few examples. NCR-MLS clearly states that listing agents are not allowed to circumvent this by sneakily adding words and remarks such as call for compensation on a buyer's side. A lot of new revised forms, especially for the buyer's agents in the past. Some buyer's agents were relaxed about getting a written commitment early in the process. Now, if you're even going to show just one home, you need a signed agreement. Though still anecdotal at this point, it appears that average buyer's agents' commissions have already taken a step lower. I'm seeing a lot of 1% and 2% offers on broker websites. That's just on the listing side. New businesses like verified commissions and listing split have sprung up to offer what the MLS no longer can, a central place for offers of compensation to be advertised. Of course, that's happening. We'll start to see the impact on commission structures. How much will sellers be willing to cover on the buy side and total commission rates, especially buy side, fairly quickly. But the impact on the transaction volume and total commission pool will be tricky because volumes are likely to rise from here. My big concern is, of course, first-time buyers who are already going through a bit of sticker shock. FHFA index gets no respect, but they should. The Federal Housing Finance Authority has home price data on all 50 states and over 400 cities stretching back to the mid-1970s. It's constructed using the same highly accurate repeat sales method that Case Schiller employs. In other words, it's tracking real home price appreciation rather than measures like median sales price, which are skewed by the mix of homes for sale. But because the FHFA data comes out on the same day as the more popular Case Schiller indexes, and the results often look very similar, most people ignore the FHFA data. Here are two good reasons to pay attention, though. The FHFA data is available to everybody for free. You can get monthly data at the national or regional levels and quarterly data at the state and metro levels. The FHFA data set only includes home purchases that were funded with a conforming loan. That means that it excludes all cash sales and jumbo loans. During a period where 30% of monthly sales are all cash, that arguably makes the FHFA index more relevant to the common, not rich, not old man. It's pretty obvious from the graph above that the indexes generally mirror each other. That said, Case Schiller seems to be a bit more extreme. Higher growth is an upswing, lower growth or declines in the downswing. The FHFA index also appears to lead the Case Schiller index by a month. It's also notable that the FHFA index has shown zero or no month-over-month growth 3 times this year, while the Case Schiller index has had month-over-month gains of between 0.3% to 0.5% each month. While the Case Schiller press release shows index data for the nation and 20 big cities, New York, Tampa, Seattle, etc., the FHFA press release shows index data for the nation and 9 confusingly named regions. Since you probably have no idea which states are in the West, North, Central region, here's your map, check it out. Keep in mind that 1 or 2 states in each region have an outsized impact on the regional index. Example, Texas for the West, South Central, and Florida for the South. Atlantic, that's just a population thing. In May 2024, Case Schiller showed month-over-month price declines in the following seasonally adjusted city indexes: Dallas, Phoenix, Portland. In May 2024, FHFA showed month-over-month declines in the following seasonal regions: East, South Central, Pacific, West, North Central, and South Central. Year-to-date home price gains, seasonally adjusted index: East North Central plus 2.3%, East South Central plus 1%, Mid-Atlantic plus 3%, Mountain Lake plus 0.4%, South Atlantic plus 1.2%, West Central 0.7%. Mortgage market. This was a giant week for the bond market and mortgage rates. The Fed kept rates on hold, but at his press conference, Jerome Powell sounded like a man who was ready to cut rates. We will have to wait until September 18th to know for sure, but the bond markets reacted immediately to the dovish commentary. The yield on the 10-year U.S. Treasury bond has dropped from 4.3% to under 4% in just over a week, and that's helped average 30-year mortgage rates drop to 6.62%. Finally, affordability is improving. Here are the current odds on Fed rate cuts, upcoming FOMC meetings below. Keep in mind that the U.S. presidential election is on November 5th. September 18th, 100%, same as last week, but 14%, the probability of a 50 basis point cut rose from 14% to 30%. November 7th, 100%, same as last week, 66% probability that rates will be 50 basis points lower than current, 33% probability that rates will be 75 basis points lower than current. December 18th, 100%, same as last week, 35% probability that rates will be 100 basis points lower than current. They said it, with wage growth abating, the labor market is playing along with the Federal Reserve's effort to slow inflation. If inflation goes back up, it won't be because of labor. Neela Richards, ADP's chief economist. The board's sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate, Chair Jerome Powell says in a post-meeting press conference. Federal Reserve Chairman Jerome Powell. Our Case Schiller Home Price Index, not seasonally adjusted, has appreciated 4.1% year to date, the fastest start in 2 years, covering the 6-month period dating to when mortgage rates peaked. Our national index has risen the past 4 months, erasing the stall experiencing last year. The waiting game for the possibility of favorable changes in lending rates continue to be costly for potential buyers as home prices march forward. Brian D. Luke, and S&P DGI, head of committee and real estate assets. And now let's take a look at the Santa Cruz numbers for July 2024. The median sales price for single-family homes across the county of Santa Cruz is down from $1,400,000 in June to $1,352,500 in the month of July. The average time to sell is exactly the same as it was in June for single-family homes, coming in again at 28 days of market time. The number of new listings in July rose from 177 new listings to 219, giving buyers a few more properties to view than the month prior. The list price to sales price ratio is down just barely from June, when it came in at 98.9%, and July we are tracking at 98.5%. Now let's take a look at the numbers that we're seeing for condos and townhomes right here in Santa Cruz County. The median sales price for July came in at $732,500, which is down almost $100,000 from the previous month of June, when the median sales price for condos and townhomes in Santa Cruz came in at $830,000. The average days on market more than doubled from June 2024, when it was trending at 20 days of market time. And July, the average days on market came in at 42 days on the market. The number of new listings in July came down slightly from June, when it was 53 new homes on the market, down to 41 new homes on the market in July. And finally, the list price to sales price ratio declined just slightly from 98.4% in June to 98% in July. Well, that's a wrap. Lots to talk about, lots in the news, and I understand that everyone's personal real estate goals are different and unique. So if you would like additional information on how this real estate market will affect your real estate goals, give me a call. I'm Shemeika Fox, your Santa Cruz real estate expert, and as always, I'm happy to help. Don't forget to hit that like and subscribe button so that you can stay up to date on all the real estate market trends for Santa Cruz County, as well as nationally, and a little bit of entertainment.